Hi everyone, my name is Robin Speziale, and I'm the national best-selling author of Market Masters. Today, I'll be sharing with you how to get started investing in stocks. So, as many of you know, if you've been watching my videos over the past couple of weeks, you'll know that I started investing in stocks at the age of 18 in my university dorm room. So I opened up a brokerage account with CIBC Investors Edge. That's a platform here in Canada. But for you starting out, let's say that you've saved up, $5,000, $10,000, $15,000, whatever it is. The next step is to open up a brokerage account. And just going back to the dollar amount, some people ask me, Robin, how much do I need to start investing? And my advice to everyone is just start as soon as you can. Start as soon as you can. If you have a couple $100, open a brokerage account. A couple $1,000, open a brokerage account. It's all about time value of money. Wouldn't you rather have your money generating a higher return than, let's say, the 1% or lower in your bank savings account? Of course you would. So start young, and you can start with low amounts too. So what you can do is, to open up your first brokerage account, just go to Google. Go to Google, type in Canadian brokerage accounts. If you're in the States, US brokerage accounts. You want to sign up for a direct brokerage. So for example, a direct brokerage like Investors Edge is one in which you can sign up online and you can do all your trading online. It's do-it-yourself investing, okay, from that platform. There's other popular ones like here in Canada, like Scotia iTrade, RBC Direct Investing, BMO Investor Line, and there's just tons of direct brokerages in the United States. And so you just really start your search on Google and pick the brokerage that you feel most comfortable with. The big five banks here in Canada, they all have direct brokerages. You should feel more than comfortable to open a brokerage with one of the big five banks here and start investing in stocks. So let's say you open up your direct brokerage with CIBC Investors Edge. You've done the registration online, you fill in any paperwork, and you send in that paperwork, and there you have it. You get your username, password, you sign into your brokerage account, you connect your bank account, your savings account, to your brokerage account, and you transfer the money you want to start investing from your savings or checkings account into your brokerage account. And from there, though, the question is, okay, what stocks do I invest in? So here's the fun part. The way that I start investing in stocks, I'm a bottom-up investor, meaning that I like to analyze individual companies, individual stocks, and do my fundamental analysis, looking through income statement, balance sheet, cash flow statements, as well as key metrics of a company, and then investing in stock. But for those starting out, I recommend using these three indexes, these three stock indexes in North America, because these three indexes, which are the S&P TSX 60, which are all the big market cap Canadian companies like Loblaw, the S&P 500, which are the 500, some of the biggest companies in the States, and then the Dow Jones Industrial Average, where you have these mega cap companies. So the reason why I tell you to start with the S&P TSX 60, S&P 500, and or the Dow Jones to look for your stocks is because these indexes, again, they hold some well-established large to mega cap companies like Exxon, like Apple, like Visa, MasterCard, Loblaw, Bell, Rogers. These are big companies. They're not going out of business anytime soon. If they do, imagine McDonald's went out of business, the world would probably be over. These are companies that you can feel safe with investing in, putting your money into, buying a stake in. But again, investing always has inherent risk. And it's important to read my disclaimer in the description to this video to understand that. But start with those 3 indexes and research the constituents or the underlying stocks in each. For example, the Dow Jones has 30 stocks in it, including McDonald's. The TSX 60 has 60 stocks in it. S&P 500 has 500. Take a look at those companies. Start researching those companies. Now, once you scan through those companies, what I like to do is I like to narrow down a set of, let's say, 10 to 30 companies that I would consider investing in. And I would create something called a stock watch list. So I would put those 10 to 30 companies in my stock watch list so I can keep track. But then I would dig into each company, okay? And to dig in, I would go to a site called morningstar.com. So on morningstar.com, what I can do, I can type in Bell Canada, and it'll take me to the Bell Canada page. It'll have a summary of the stock, but I always click on the key stats or key ratio for Bell Canada. Once I get to those key stats / key ratios, it shows me, Morningstar is great, it shows me an entire table with 10 years of key stats on Bell Canada. Okay, so from 2007 to 2017, it'll show me revenue, year over year, net income, earnings per share, book value per share, free cash flow per share, return on equity, return on capital, net margin. These are the key metrics you want to look for, and you want to see growth. You want to see top line revenue growth year over year for 10 years, top line net income growth, earnings per share growth, book value per share growth, free cash flow per share growth. And you just go right back to Morningstar, and if you want to research McDonald's, you do the same. Type in McDonald's on Morningstar, click on the key stats / key ratios, and it'll bring up that nice 10-year table. You can see it all on one page, and take a closer look at a company. And think like a business person. Imagine if you wanted to buy up this entire company now on the stock market and privatize it for yourself. Then are these financials telling you you want to own this company? That brings up another key point. As an investor in a stock like McDonald's, when you buy 100 shares of McDonald's, you are a part owner of the McDonald's company. So when you walk into McDonald's to buy your next Big Mac, just remember you have a share in the profits. You have a share in the earnings. So those 100 shares, just calculate what's the earnings per share. And you can take the earnings per share times those 100 shares, and those are the earnings that you are actually theoretically generating from McDonald's on a year-over-year basis. Now, when you invest in McDonald's, not only do you have to understand that concept of earnings per share, but there's also the dividends in which you actually will collect in your cash account in the brokerage. So you invest in McDonald's, let's say the dividend yield is 3%, and to calculate a dividend yield in a company, you take the annual dividend the company pays and you divide it by the price of the stock, and that gives you the dividend yield. So you're actually generating on a quarterly, every 3-month basis, so 4 times a year, a dividend from those companies that pay dividends. And they're usually all these big companies that again reside in the S&P 500, Dow Jones Industrial Average, and S&P TSX 60. So when you invest in stocks, you're buying stakes in companies, and always remember that. So it's not just a piece of paper, it's not just digits, a line item in your brokerage account. So when you've narrowed down your watch list from 10 to 30 publicly traded companies to, let's say, I would recommend narrowing it down to about 5 to 10. In my opinion, a good starter portfolio would be 5 stocks and $1,000 per stock if you're young. If you're older, put more money in based on your risk tolerance, of course. It's my opinion. But and what you do, you just go to your brokerage account, and you would pull up the trade section. You would type in the ticker symbol for the stock. Okay, so if it's Rogers, if it's Bell, if it's McDonald's, you type in the ticker symbol. And a great way to research those simple things about a stock. You just go on Google Finance, and you type in Rogers, and it'll pull up a nice summary for you. It'll give you the ticker symbol of Rogers. It'll give you the price of Rogers. It'll give you a nice chart for Rogers to show the stock price over time. And so you're in your brokerage, you type in RCI.B, which are Rogers shares, and let's say you buy 100 shares of Rogers, and there you have it. You've just bought 100 shares of Rogers. That's an example, of course. And you could have a starter portfolio of 5 stocks, and that's how you start investing in stocks, everybody. Now, it doesn't go to say that you definitely need to conduct your research. If you're still not comfortable with investing in your own stocks, with do-it-yourself investing, seek out a financial advisor. And again, read the disclaimer in the description to this video. So thanks for watching. Please subscribe to my channel for new content. Visit my blog on robinspeziale.com, where you'll find more investing strategies as you get more advanced. And buy my book, Market Masters, Interviews with Canada's Top Investors. All links are in the description to this video. Happy investing, everyone.